dig deeper into those retail sales numbers and the outlook for the industry. I'm joined by David Abella. He's the fund portfolio manager and senior equity analyst at Rochdale Investment Management. David helps manage $3 billion. Great to see you again.
Great to be here, Betty.
Let's talk about Target first. Down 5.5%, but that was actually better than expected, right?
That's right. Target is a little bit more affected by the Easter shift than either other retailers. They're actually anticipating mid-teens comps in April. So when you look at March and April, they're hoping for more of a high single digit. But Target has been a weak performer for a while. Their comps have been disappointing. The stock is down quite a bit year to date. It's at a very cheap valuation, but Target needs to get its act together. It's not firing on all cylinders right now.
No, and it's used somewhat as a benchmark in some ways. However, it's got these unique problems, right? So how do they turn around their sales then?
Well, they were going a little more upscale, as everyone knows, and trying to differentiate from Walmart. Then they were trying to compete against Walmart by competing more on price. Now they're bringing more food in, which is helpful, but it's bringing down the margins a bit. I think they're just trying to go too many directions at once, and Target,
they need to narrow it
they
down
need to narrow it back to the good old Target, really.
Okay. The roundup of these retail sales numbers overall, though, what do they tell you?
Overall, they're really good. I mean, I went in yesterday thinking that the market was expecting an overall miss. Retail stocks were a little off year to date and off yesterday. But most of the companies, there's exceptions like the Gap, have beat their expectations by a pretty wide margin. And that's in the headwinds of rising gasoline prices and the housing market still weak. Interesting, Bed Bath & Beyond had a great number despite the housing. So it's a real sign of consumer strength, and unemployment slowly whittling down is very positive.
Right. And I think actually Bed Bath & Beyond is one of the big movers right now on the S&P because of those numbers.
Right.
But dig deeper for me for the consumer spending part of it, because what does it tell you then? That they're doing well in sales in the month of March when you've seen oil prices, gas prices go up. Does it tell you that we're still making up from these last few years, or are we in actually a new growth phase with consumer spending?
Well, I think 2010 was a pent-up demand and making up. I think now you have a definite bona fide, there is recovery in unemployment. You have a little bit of a core people unemployed 6 months or more that are having a tough time, but others are doing better. Personal income growth is definitely positive. I mean, there's two effects that drive spending, the wealth effect and the income effect. And the income effect is pretty good right now, and that's really dominant. And it's kind of offsetting whatever wealth effect from housing is there.
We've been talking quite a bit about retailers, though, facing these price pressures from commodities, right? And that they're going to be raising prices. Is there some break point where that starts to, affect consumer spending?
Well, I think so. But on the other hand, I think consumers are so mentally ready for inflation that they'll be accepting of it in a sense. I mean, for the longest time, we were in a bad economy, and no one would pay a cent more for anything. Now people are understanding we're in a recovery, inflation's out there. So I think the consumer, they kind of have to take it, but they're more accepting of it.
So the price increases are basically priced in then for them, for their outlook then.
That's right. I think it'd still be a shock, and we're going to have higher inflation than we've had in a while, unfortunately. That's my view. But
okay. David, thank you for stopping by. David Abella, the portfolio manager at Rochdale Investment Management, where he helps manage $3 billion, including some of the big retailers like Walmart.